Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments on the live feed. If you need any more advice after the session and you haven't already done so, please join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with this and I'll reveal the results at the end of the show. Good morning, everybody. For those of you who haven't seen me before, my name is Judith Dugdale. I am a chartered accountant and I'm based up in the northwest of England, working at a firm called MHA Moore and Smalley. MHA Moore and Smalley is a large independent firm of accountants and business advisors, and we offer all manner of services that you would expect any chartered accountancy firm to offer. So things like personal tax returns, statutory accounts preparation, corporate tax returns, audits, VAT advice. In addition to that, because of our size, we can also do some specialist areas as well, such as corporate finance advice. We have an outsourced payroll team, an outsourced bookkeeping team. And the team that I deal with, the team I look after, is what we call digital solutions. And there are two main areas of the work that I do. One area is I head a group of people who look after clients who use cloud accounting software. So we've got well over 1,000 clients using QuickBooks Online at MHA Moore and Smalley. And the digital solutions team make sure that the statutory side of things are done efficiently and as effectively as possible. So we work with our clients to do their year-end accounts and tax returns as quickly as we can post their year-end, to give them lots of time to manage those tax bills, and also to be able to give them as up-to-date advice as we possibly can on how they've done last year and what changes they may need to put into place for the forthcoming year. We also, because of the accessibility of cloud accounting software, do lots of strategic work with our clients, regularly going in and reviewing their QuickBooks license, reviewing their performance month on month, even week on week with some of our clients. The second part of what I do and what my team do is I have two dedicated software support managers, and they are there to help set up new accounting systems for our clients, to train them on that, and then to offer ongoing support. They also review regularly what apps are most applicable for different sectors, and then we relay that information to our clients and hopefully help them build up a bit of an ecosystem in the cloud, which makes them a lot more efficient and therefore makes their business a lot more effective. What I wanted to just touch on before I start answering any questions today is Making Tax Digital, or MTD, as you may have heard it referred to. Making Tax Digital, a lot of people should be aware of it, particularly if you're VAT registered. So HMRC decided in their wisdom, well over 2 years ago now, 2.5 years ago, to introduce Making Tax Digital for VAT. The thought behind it was that they wanted to enable organisations and businesses that were VAT registered to make sure that the information they supplied to HMRC was accurate and they supplied it in a timely manner. That bore out Making Tax Digital. And the main premise of Making Tax Digital is twofold. One is to record all your transactions within your business digitally. And secondly, to send the information to HMRC directly out of software. Now, as I mentioned, this has been in for probably about 2.5 years, but it was only compulsory for businesses who are VAT registered and have VATable sales in excess of £85,000 in any 12-month period. So if you turn over, say, £60,000 and you happen to be VAT registered voluntarily, you were not caught by MTD. You could sign up early if you wanted to, but there was no compulsory element for you. That is changing, and from the 1st of April 2022, any business that is VAT registered, irrelevant of the size of their turnover, must comply with Making Tax Digital. We're well aware that a lot of small businesses are still using manual records, Hopefully, any of you watching here today have either made the decision to move to a digital platform such as QuickBooks Online, or you're really considering doing it. My advice to you guys is to, if you're considering it, make the decision now, and give yourself a bit of time to get used to the software before you have to submit that first return under Making Tax Digital guidelines. The actual submission is really simple. There's no difference in the information you send to HMRC under MTD for VAT than what you do when you're not registered for MTD. It's still a quarterly return if that's what you do. Some people do monthly returns and some people do annual returns. Whatever frequency you file at the moment, that is the frequency that you continue to file under Making Tax Digital. There's a lot of myths out there, and a lot of people think that the information that goes to HMRC is all the transactions behind those total outputs and total inputs, but it doesn't. The only information they get is a total figure of the VAT due on output sales, the VAT on input purchase that you want to reclaim, and your net sales and your net purchases. There's no transactional information that goes across to them, but you do have to send that information from software. And just a note on that, if you happen to use spreadsheets, which are classed as digital, that is absolutely fine, but you can't submit your VAT return from the spreadsheets. So you will have to use something called bridging software, which will be an additional cost to your organisation. And therefore, we would always recommend that you do look at QuickBooks Online and look at that switch so that you can gain all the efficiencies that are within QuickBooks Online software, which will save you an immense amount of time. I just wanted to touch on as well the next stage of Making Tax Digital, which is going to be a huge change for so many people out in the business world and the not so business world as well. So the next change is Making Tax Digital for income tax self-assessment. Currently, if you're self-employed, you run a sole trader business, you're part of a partnership, or even if you just have some rental income, you have to prepare a self-assessment tax return. You file this by the 31st of January every year, and you can do this via your personal tax account. You could fill in a paper return and send it in by October each year. Or what a lot of people do is get their accountants to prepare and send that information off. That's a fairly straightforward process at the moment. From the 1st of April 2023, HMRC will be bringing in Making Tax Digital for income tax, and you will go from making one return in January each year to making a return 4 times a year at the end of each quarter. That information that goes to HMRC will be a summary of your income and your expenditure, and it will have to go electronically from software, just like the VAT returns have to do under Making Tax Digital for VAT. In addition to those 4 returns that you will send at the end of each quarter, there is a 5th return where you adjust for any annual entries that maybe you don't know as you go along. So things like depreciation if you own assets, maybe some interest on long-term investments that you've not had the information for during the year, and maybe some rental charge that maybe only comes once a year, and you need to adjust for those. Finally, there is a 6th return, which is almost a bit like a final declaration to confirm what you submitted. So this is, as I'm sure you can tell, a huge change from what we do at the moment. You will be refiling as an individual, doing an income tax self-assessment return. You will go from 1 return a year to 6 returns a year. You also have to comply with the digital element of Making Tax Digital, which is that your records have to be kept digitally. That can mean something as simple as an Excel spreadsheet, or using cloud accounting software or desktop software. Again, we would highly recommend QuickBooks Online as a solution for any small sole trader, partnership business who hasn't had to comply with Making Tax Digital for VAT yet, but will be caught over Making Tax Digital for income tax self-assessment. QuickBooks Online will also be a great solution for any landlords out there. You will be able to feed in from bank statements showing all your rental income, put through all your expenses, And then you will be able to even allocate each rental property to its own area so that you can see the performance by property as well as overall. The idea behind using something like QuickBooks Online is that you will gain better insight to how your business, your self-employment, or your rental property portfolio is performing. So I really highly recommend that you have a look into how QuickBooks could work for you. I'm going to leave it there for now on Making Tax Digital. If anybody's got any questions about it and whether they feel like they're maybe not going to be affected and just want to double check, please feel free to ask those questions today and I'll try and get through as many as I can. But also any questions that you may have regarding QuickBooks software itself or anything accounting in general, please pop those questions in for me. So the first question we've had one from Ella on Twitter, a direct message. She's thinking about launching a Patreon account to support my work, but I don't know how we will log donations such as this in our accounts. Any advice? So logging donations just needs to be set as an income category within your QuickBooks Online software, assuming that you're using QuickBooks Online. Ideally, you should try and link the account through to QuickBooks using one of the API links. If you do that, you'll be able to categorise it in a separate income category called donations, and then that will sit there as a separate entity, a separate line from every other form of income that you have, and that pretty much should be all you need to do to keep it separate and to be able to see what those figures are coming through on a weekly or monthly basis. We've got a message from Rory on Facebook Messenger. Rory's just started his own limited company and he's just a bit confused about how he can invest in his own company. He's heard about directors' loans, but it's quite confusing as he doesn't necessarily expect to get the money back. He puts his own personal funds into the company, and how does he do that? Okay, Rory, so yes, the phrase director's loans is the right phrase. Effectively, when you set up a limited company, barring it being a very small consultancy business where there's no real startup funds needed, there will always be an injection of money into that business, either by an investor, so a third-party person looking to invest in your business, from you, the business owner, or from a financial institution such as a bank, where they might offer you an overdraft or a loan. So you need to record that in your system, because the money that you give to your business from the start is money that you are owed back from that business when it has the ability to repay you. You may well at the moment think that actually your business doesn't have the money to repay you and you can't see that it will do for a number of years, but that doesn't mean you shouldn't record it. So within QuickBooks Online, for example, you would set up a category called Director's Loan. When the money hits your bank account, you would put that income, obviously, into the bank, and then the opposite entry would go to your Director's Loan account. And then that sits on your balance sheet as a payment due to you when the money is there. At some point in the future, when there is enough money in the bank to repay you, you would simply make that payment back to yourself, to your personal bank account, and you would just record it against that Director's Loan account. Any money that you put into a business as a director is what we call tax paid. So when you take that money back, there is no additional tax to be paid, which is why it should always be recorded. Because what we would recommend as a bit of tax planning advice as your business grows is that we would try and keep you out of high rate tax for as long as possible. And a way of doing that is to repay monies back that you've introduced over a period of time to keep you at the basic rate level of income. Hopefully that explains it a little bit better for you. Any more questions at the end of the show, I'll leave my details so you can always get in touch if you need a bit more advice on that. Next question is from Tammy on Instagram direct message. Tammy says, so as part of MTD, we'll have to do 4 submissions a year. How does this make business easy for us? What are the benefits? Yes, Tammy. Income tax and self-assessment under MTD have 4 submissions a year, plus 2 extra ones at the end of the year. But yes, during the year, it's 4 submissions that need to go directly from software. Your question is, how does this make business easy for you? It doesn't make business any easier for you. However, if you use software, it doesn't necessarily make business any harder for you, but it is an extra bureaucratic process that you've got to go through. However, what are the benefits? Well, the benefits are actually there for you. HMRC introduced this to get their taxes rights that they were receiving, so that's a benefit on their side. But for you, if you can keep your information up to date so that you can do those quarterly submissions on time, you are going to have more information within your software, which means you can make better decisions. If you just do an annual self-assessment at the moment and you tend to, I don't know, pull everything together just after the tax year is finished, and you give that information to your accountant, or you submit the tax return yourself, all the way through that year, the only thing you've really got any guide on how well you're doing is by looking at your bank account. If, however, you feed all the information through into QuickBooks Online, for example, and you regularly update that, you'll be able to run reports to see which weeks you did better at making more money in, which months were better, which services you provide, or which products you sell, which ones are doing better than others. There'll be a whole host of information held within QuickBooks that can really help you make a better decision on what to do next, or what to change, or how to organically grow. It's really hard to make any informative decision that enables your business to grow if you don't have the right information. So for me, the benefits of MTD is more up-to-date information, which should enable your business to become more profitable in the future. I've got a direct message on Twitter from Damon. If my accountant is managing all my tax returns, is there anything that I need to do myself, or will they manage it all? So, Damon, that depends on how you send them their information. We do personal tax returns for thousands and thousands of clients at Moore and Smalley, and I would say that 95% of those personal tax returns, we get the information in one go, anywhere between April and December following the end of the tax year. We, under MTD for income tax, we can't comply with the regulations if we only get that information once a year. So if you're giving your accountant everything to do, you're going to have to make sure you give your accountant everything on a quarterly basis, and you will have to make sure that they get it in enough time to meet the deadlines. As we understand it, the quarters will be, when you get to the quarter end, you'll have 30 days to file that quarterly return. And if you think about it, if, for example, at the firm I work at, I've just said we've got thousands of clients where we do their self-assessment tax returns. If all those clients decide that they want us to do their quarterly returns, that is an awful lot of work every single quarter. So if everybody gives us their information a week before they've got to be filed, it's impossible to file them all. So it is really important maybe speaking to your accountant earlier rather than later. I know it seems so far away, April 2023, but it's actually the next tax year that we need to get sorted, so that come April 2023, everybody knows what they're doing. So it is worth speaking to them now, finding out what they recommend, if there's different bits of software that they want to use to try and speed up the process, or equally, is there a way that maybe you could do more of the work to save a bit of money? If accountants are going to have to do 4 filings a year plus the 2 at the end of the year, that effectively is 6 times more work than what we're doing now. So I'm sure everybody out there can understand that it's unlikely that the fees for doing 6 returns is going to be the same as doing it for 1. So you might want to look sooner rather than later to see if there's a way that you can do a bit more, or at least find out what those fees could be. Chloe on Instagram direct message has asked, for the average small business, when will be the best time to switch over to MTD? and should we be prepared before we make this, and what should we do to be prepared before we make this switch? So Chloe, it depends here whether you're talking about MTD for VAT or whether you're looking at MTD for income tax and self-assessment. If it's the VAT side and you're a voluntarily registered business for that, and you're conscious you're going to have to comply from the 1st of April 2022 for the VAT side, then I would recommend as soon as you finish your next VAT quarter and you file that return, you move on to software if you've not already onto it. And if you're already on software, then sign up to MTD once that return has been filed, because that will then give you a couple of quarters, hopefully, before the regulations kick in, to make sure you're happy with the process, make sure you're happy with what you're preparing, and that you know that it's not going to fall down at that first deadline that you get. If you're talking about making tax digital for income tax and self-assessment, we do have a bit more time. However, as I said, once we get to March 31st, 2022, the new tax year kicks in a few days after that. And I would highly recommend that in that new tax year, whilst that isn't covered by MTD, that you get started and you're using the software so that you know any little gremlins out there that you're not sure about, you know how to keep things up to date, and you can get used to making sure that at the end of each quarter, you know your information is accurate. That means that when you come to the next year, when you have to do those quarterly filings, you'll be way ahead of the field, and you won't be one of those people asking accountants for help when they've also got another 1,000 inquiries asking exactly the same thing. It's all about beating the stampede at the last minute and getting in there early and probably being a little bit smug that you're ready. I got a message from Joanna on Instagram direct message. She said, is it true that some businesses are exempt from MTD depending on the VAT threshold? Is this likely to change, and if so, when? Yes, so Joanna, I don't know if you saw at the start, I mentioned there how MTD for VAT is already compulsory for any business that earns over £85,000 in any tax year on VATable sales. So that's not the profit, it's the actual turnover. So if your turnover is over £85,000 in any 12-month period, you have to comply with MTD. That has been in now for 2 and a bit years, came in the 1st of April 2019. From the 1st of April 2022, that threshold disappears. So anybody who is VAT registered has to comply with VAT from the 1st of April 2022. So that is the date you need to be aware of if you're one of those people that's currently under that threshold. If you're not registered for that, it does not affect you. So I know there are hundreds of thousands of businesses out there that are small, only turnover, say £50,000 a year, so they've never registered for that. If you've never registered for that, then you are not affected. This isn't everybody has to register for that and then become registered for MTD. It is purely those businesses that are already registered for VAT that will have to comply. And just in case you're wondering why people would register for that if they're under that threshold where you have to, usually it's because they want to reclaim VAT on expenses, and also quite often it's so that they can seem a bit more professional or maybe a bit larger of a business than they actually are. Because a lot of organisations will look at a business, and if it isn't VAT registered, automatically assume it's a very small business and maybe choose not to do work with them and choose to do work with somebody who is VAT registered. So registering for VAT, if you don't need to, can give that illusion that you are bigger than what you maybe are. Mike on Twitter, direct message, he's asked, what sort of questions do you typically get from your clients about MTD and how do you resolve them? So Mike, this is a really good question. MTD for that, the main questions were, how do we get out of it? I don't want to comply, I'm too old, I don't have a computer, I will find it hard with internet reception, etc., etc. So that first question was always, how do I get out of it? And there are exemptions out there. but they are few and far between, and they tend to be around religious requirements. So some religions are not allowed to use technology, so they're automatically excluded from making tax digital. There are some areas of the UK where there's no regular mobile or broadband available, and therefore they just can't use the technology needed to be able to submit those VAT returns. So they are also exempt. Age is not one of the exemptions, and as a firm of chartered accountants where we've got a big range of ages of business owners, we found that actually what we had to do was provide an outsourced bookkeeping service for some of our older clients to enable them to carry on doing what they were doing, and they basically give us their manual records and we digitalise them for them so that they are fully compliant. So that was the first question. The second question was, what software should I use? As I said, I think at the start, we've got well over 1,000 clients using QuickBooks Online at MHA Moore and Smalley. And for the majority of small businesses, and by small I mean up to £10 billion turnover, I would recommend QuickBooks Online, other than if you're in a very specialised sector and needed some bespoke software. QuickBooks can be changed very, very easily, depending on what sector you are, and there are the project functions within it. It's CIS compatible. There's loads of areas of QuickBooks which makes it work for the vast majority of businesses. So the question around which software I could use, we quite often would demonstrate QuickBooks Online to them and how it would work for their business. And then the next question we've got is, can we have some training? And I would always recommend, if at all possible, to get training on the software you're going to use, because the quicker you get some really good training off an expert, the better results you'll get out of using the software, and the benefits will hit you quicker. Lots of people we come across use QuickBooks Online, for example, but don't know all the features because they've never had proper training, and therefore are not quite getting out of the software what they could. So make sure if you're going to do that switch to software that you get some training off an expert to make sure that it working in the very, very best way possible. I've got a very quick question from Daisy on Instagram. I'll just quickly close up before we finish. She says she's accidentally paid a bill under the previous vendor company name, and QuickBooks won't let change the name or receive payment. What should I do? To get it out of QuickBooks, Daisy, if you click into the transaction, there should be some little dots at the bottom with a more sign. If you go in there, you can actually void that transaction and then just start it off again. And hopefully that will solve your problem. Thank you. So that's all we've really got time for today. Before we finish, I just wanted to run through the poll results. So the question we asked today was, have you signed your business up to making tax digital? 10% said yes, and 90% said no. So hopefully today's session has given you a little bit more information about MTD. My advice for you 90% watching that have said no is speak to your accountant, check when you are affected and how you are affected. The sign up is really straightforward. That's the easy bit. You go to gov.uk and you sign up for Making Tax Digital, and within 48 hours you get an email from HMRC to say that you've been accepted and that your business is now going to report under the MTD requirements. The harder bit is knowing how to do that reporting and how to comply with all the digital regulations that are involved in it. So I know people can be a bit nervous about ringing their accountant. Please do so with this. They answer these questions all day long. They'll be able to help you immediately, and it saves you spending loads of time worrying about how to deal with everything. So hopefully that's helped some of you. Thank you very much for all your questions today. If you want to find out any more about setting your own business up or how MTD affects you, please head over to our website, which is www.mooreandsmalley.co.uk. We've got loads of information on there, including an insight area with blogs and videos. And you can also email myself or my team on digitalsolutions@mooreandsmalley.co.uk. www.maximise.co.uk, and we'll be able to help you with any of those MTD questions that you may have. Coming up on Ask the Expert tomorrow is Sean Goldsmith, and he's a multi-brand franchiser. Tune in to get advice on strategic planning and building a franchise and going global. And finally, just a reminder that if you need any more advice from the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. Thank you very much for watching and have a great day.